Good morning, everybody. If we can settle down. Super. Thank you for coming. So let's see who woke up earlier. I will start. 4:45. Anybody earlier than me? Okay. Oh, wow. I thought I was early. Okay. So I feel for you. I hope you feel for me as well. Thanks for coming. I know the early breakfast session is brutal. They are the best to get over the hangover of the previous evening, right? You, Shalina, please. Sorry, I had to start. And,
I didn't know.
Sorry? Does the beautiful apply to me as well, or? Let's applaud the wonderful, not only panel, but participation. So it's wonderful. Yes, I know.
Thank you for
Calling it out.
being the diversity club.
Yeah. So this is actually going to be the mood, a continuous conversation. So please, let's make it intimate, participative. The breakfast is there. If you need some more food, then I need to put some intention. We want this to be participative. We want this to be your energy kick for the rest of the day. And so the setup will have a bit of some important conversation starter. I'm going to go into the topic in a moment. We have Paul Polman, who's going to join us soon. He's believe it or not, there are also 7 a.m. sessions at Davos. So he's finishing his 7 a.m. and then he will join us, and then he will join us for some close remarks. But the topic we are bringing back this year is the topic of product portfolio transformation. Okay? The context is that we have lived a very powerful, intense, I call it a decade, is probably for some a bit more, for some a bit less, of sustainability programs that have really accelerated at the corporate level. Programs that have helped many of you to transform your supply chain, to transform through your decarbonization programs, but programs that very often have kind of hit a rubber wall when it came to the products and the services that you bring to the market. So that disconnect is something that we started to study and intercept last year, and we launched the topic. Is that the next important frontier for sustainability to evolve through the products and to the product transformation? And what we started to learn is that indeed, yes, and actually many companies have started that in parallel. And so what we want to do today is to explore some of those use cases, and those use cases come with a lot of great success, different strategies, many challenges ahead. And that's the intention today, is to explore those challenges. And to do that, we have that wonderful panel that you mentioned a few minutes back. And I think it's great to start and dive into it. Once we inspire the conversation from here, we will start, of course, engaging with you. But feel free if you have any question, or just jump in as well. And if any curiosity, that's a bit the intention we have. I would like to start with Jennifer. Jennifer, at Philip Morris International, Chief Sustainability Officer, is one of those cases that gave me a big wake-up call. It's sort of, oh, you think this is a new topic? Well, we've been on this journey for quite a while. And I think it's great to start with the case that Jennifer will bring to us, because of the maturity of that transformation and the many challenges already overcome and the many challenges that are still ahead. So I will let you get us started, Jennifer.
Thank you.
Thank you, Carlo, and good morning, everyone. It's nice to see many of you. I remember last year when we were here with Paul, starting to have a conversation very similar, and many of you I had not seen, so it's nice to see you again. Yes, so you were talking about product portfolio transformation. And I think it's a topic that a little bit or a lot touches on many companies. So obviously a company like ours that sells a product that creates such a big negative externality makes it the very core of our strategy, and transforming that becomes an imperative for us to not just have credibility, but to, as a social construct, have a license to operate and exist in society. So this has been from the outset the raison d'etre, the purpose of what is it that we're trying to achieve and how is it that we're trying to achieve it. But what I think is that it is not just about cigar companies. All companies create negative externalities. So rethinking how success looks like, minimizing those negative externalities, and thinking about what is your product proposition and what is it that you're bringing to your consumers, what is your offer and your product proposition in a more holistic way, starts to make sense, not just in relation to sustainability, the word, but what is the economic models that we want to create. So indeed, you were mentioning that PMI has been doing it, entered this very radical transformation, not just about product, but really about changing the entire value chain and how we engage with society for 10 years. And so now we're getting to a point to ask questions about, okay, but what are the impediments? Why have we not completed it? Why are we still in the cigarette business? And I think this is a very important question because it comes down to systemic issues. And a lot of them are being discussed here this week in relation to climate change, in relation to inequality, in relation to AI, issues that are affecting everyone, and therefore the system and all different stakeholders need to participate to change it. And so what I'm very excited about to discuss today, and I hope that we can really have a conversation, is to find those patterns and those commonalities. You know, what are the levers of change? So that it's not just about investing in innovation and having a better product proposition, but how does a successful transformation look like, and what are the requirements? So thank you for coming again, and I look forward to chatting together.
Thank you, Jenny. I have a question for you before we move to the next. So we started to list down some of the levers for that product portfolio transformation. And so I'm going to just name a few, and then I will ask you a question. So it takes innovation capabilities internally. So I think companies innovate all the time, but if you want to innovate with the intention of what is a fit for future product portfolio, like you said before, AI is empowering, is powering that transformation. But there is also this concept of, should my future portfolio be sustainable by design? Is that the best way to be fit for future? And many companies seem to think so, but then what's the innovation that it takes to do that? And do I have those innovation capabilities? So then another one that it takes is the consumer adoption. Will my consumer accept and come with me? You have a product that actually sells pretty well, your legacy product like cigarettes. Will the consumer, my customer, be happy of that change? Will they reward us for that intention? Investors buy in. Will the investor trust us in this transformation? We are maybe trying to transform a billionaire product. There's a lot of companies with portfolios of billionaire products that are problematic somehow. Will the investor believe that transforming those billionaire products is the right thing to do, right? Regulatory reforming. Can I do it in certain countries, or is the burden too high and actually I have to fight against any economics to try and do it? Do I actually have a strategy to accompany that transformation, which means a lot of fuel internally from the company? Do I have the courageous leadership to get there? Because again, to bring the consumer and the investors and the regulatory with you, sometimes it takes not only skills, but also courage. And finally, do I understand the system well enough to understand timing and levers that need to be put in place? So that's a little bit the complexity of those transformation. And if you had to, I know they are all very important, but if you had to pick one today as the most lively challenge in your own transformation journey, what would that be? You should normally, but can we have all the mics on? Or yeah? Oh, those ones.
Hello. I think you named them all, and I think it's a very nice layout of what are the necessary components of successful transformation. I think I would add one in terms of a little bit self-awareness, which doesn't come ex ante for sure. Hindsight is 2020, so it's easy to say, this is what I know and this is what I could have done differently. But for sure, companies that are undergoing or seeking to go through transformations on their product proposition or entire business model need to understand that there's so much under their control and so much outside of their control. Back to your last point on systems, So you can have the resources, you can invest in R&D, you can have a great product, you can upskill your organization, recruit the talent, your consumer might like it, but if the system is not with you, the pace of that transition is very much constrained or even dictated by the system, right? And so I think that policy and regulation and the ability to have integrated conversations to start introducing that change is a very important component of product transformation, And I think, of course, I'm thinking from a very self-centered perspective. How is it that you can phase out cigarettes completely? But think about energy, for example. How can you transition to renewable energy if the infrastructure is not there, if the consumer demand is not there, if policy is not encouraging it, even if the company is investing so many resources in transitioning, if there's still a demand for fossil fuels, if the infrastructure in a country is not there, then the pace of transition, the viability will not happen. And I think that awareness is very important from different stakeholder groups so that you can understand, irrespective of where you stand, media, academia, scientific community, consumers, regulator, policymakers, what is the role that you play in changing the system? And sometimes other stakeholders don't know it. So I think from a business perspective, having that awareness and that mapping of understanding who can do what to trigger the conversations is a very important component.
I need to get back the microphone. Thank you, Jenny. Thank you so much. I hope you start getting a little bit where we're trying to get with the topic, and I think this testimony is very important in terms of understanding some of the challenges, let's say. Linda, Chief Sustainability Officer at Zurich Group, and last year you were also here with us, and I remember you positively surprised me with not only optimism, but actually a reality check in your own role and in your line of business. You have been witnessing actually quite a number of product portfolio transformations within your own company and with the companies you work with. And I'd love to hear what's your perspective in 2026 on the topic and what you have seen and observed.
Hi, everyone. I'm still an optimist. I think you cannot do this job without being an optimist, because then you would have thrown in the towel a long time ago. I'll talk from a financial services perspective, because it's quite different from many of your industries. First of all, we're highly regulated, so innovation is not very easy. Second piece, we're a service company. Actually, we don't produce anything. We actually sell our underwriting services and engineering services, and I'm going to come to that. But innovation in our company is one of our 3 strategic pillars. We have 3 pillars: customer focus, simplification, and innovation. But the reality is we're really bad at innovation, because a car insurance is a car insurance, a house insurance is a house insurance, a life insurance is a life insurance. But bringing in the sustainability perspective, what we did was really try to challenge the organization on it, on this innovative piece. And the thing that we did, and if you're a financial services company, you put a target, and then you get people to work. So we actually introduce different types of sustainability product categories where we said, well, energy, motor or automotive, saving solutions and so on. And that really triggered our countries to start thinking about, first of all, they took out all the products that is already existing in it and said, ooh, what about if I add planting a tree on this house insurance? Is that sustainable? And so there was a lot of those conversations in the beginning. And then slowly but surely they started to get it, and particularly on the retail side. And it was very much about, okay, so how do we incentivize people to buy an EV instead of buying an ICE car, right? So it was very much, okay, so we always have to price the risk. So just because you drive an EV doesn't mean that you're a better driver, that you might have less losses. So you always need to look at, okay, so what's the ecosystem? What can we provide as an incentive? And in this case, we said, well, why don't we partner with charging stations? And we insure the charging stations, but we also, anyone that takes a car insurance policy with us gets actually discount on those charging stations. So that's the type of, so all the time we're looking for what are the incentives that we can do. Saving solutions, maybe you don't think about, but we have to make sure that there are funds that we offer to our customers as a choice. We can't force them to take it, but there are actually that invest more sustainably. So that on the retail side has been going quite well. The bigger challenge we have is on our commercial side, and I would say 60% of our business is commercial, 60% of revenue comes from the US. So of course that is a challenge in itself. But there we put in place, and Christine sitting there, she's been part of that. We have a very clear customer engagement process where we, not to be policing our customers, but where we sit down and we try to understand what does the transition plan of our customers look like, what are the technologies that they're investing in, what are the types of challenges, the time frames, the CapEx investments, and try to use that insights into then inform, okay, so what are the types of products and services that this customer is going to need? And how can we start preparing now for that so that we can accompany the customer? And in the beginning, of course, there were some few customers said, well, why do insurance companies want to come and talk to us about our transition plan? You know, we just need an insurance for this plant. But actually, we are seeing that also as a customer building tool, because our industry is actually very much run through distribution channels. So we are highly dependent on brokers on the commercial side and on agents on the retail side. So many of the customer relationships we don't own directly. So that is why this is a long-term process that we're going through to really try to put in place. And there was absolutely reluctance in the beginning from the organization to say, but why do you want to talk to this company? Why does it really matter? Why? I mean, we're just one piece of the puzzle. But actually, the findings and the insights that we get is really helping us to transform the product portfolio and going forward. Particularly, I mean, in the technology sector, because we're also an industry that like to know the risk very well before we offer any new product. So now we are the biggest insurance companies of data centers, but that wasn't done in a day. We've actually worked with customers for a very long time, trying to understand the entire value chain and how it's getting put together. So that customer engagement piece is just so important in our industry, where it's hard to innovate, it's risky to innovate, and also it's highly regulated.
Well, so I had listed here: innovation, consumer, investors, regulatory, strategy, leadership, systemic, self-awareness, and a good insurance partner. I have to add now.
Yes, and Zurich.
That's what it takes for a good transformation. But it's very fascinating to hear how actually insurance can play a very important role in maybe de-risking some of that transformation for some of the organization. And I have maybe a quick question for you, which we didn't plan, but I know you much more clever than I am, so you can answer it. But when it comes to at some point when I was working on circular economy, a lot of times I'm hearing that there is too many risks in making that happen with products, Second Life, and I've always heard if we had a bit of support from the insurance company to help a bit at the different stages, that would work better. Is that also, I just heard you saying about the data center, very interesting. Do you have any specific example on how you're helping the circular economy to take off?
Favorite topic, circular economy, because it's the most challenging one from an insurance perspective. And you know why it's challenging? Recycling in general is highly prone to fire risk. So traditionally, it's an area where no insurance company want to go. But at the same time, we know that these technology, the recycling technologies or reusing technologies are also going to change tremendously. So the risk will also change. I think that the challenge for us is to ensure that our customer and also the broker, who is often managing that relationship, brings us in as early as possible, so that we can fully understand the technology that is going to be used and how that risk is going to be evolving. And that is often, we often come in too late in the process. And it's the same on infrastructure as well. Everybody just assumes that there's going to be insurance capacity in the market because there's always been there. So a bank that provides the lending actually needs to start challenging a bit their clients to say, well, actually, how do you make sure that you build it in a more resilient and a sustainable way so that you can actually get insurance for it? So that needs to change a bit of the role of insurance.
Thank you. That's really helping to also, again, clarify and shed some light into that one of the challenges that are being faced right now. Yeah? Yeah. Thank you. In that spirit of continue that initial inspiration, we have Annabella. I'm fascinated by your Italian name. I pretend that any name that ends with A is Italian. So Annabella is really a beautiful name. Bella. So Annabella works at Shine, so a fashion group that is been disrupting a lot of the dynamics in the fashion industry, and with incredible success. And at the same time, big criticism from a sustainability perspective, right? Materials, environmental impact, and we know in business when you get challenged, you have to come back with the right answer. Otherwise, eventually, what we said before, investor, consumers, at some point, they let you down. So I think Shine is now keeping up with that success with important plans to look at their product portfolio and help that transformation. So I'd like to hear Annabella. Paul, good morning, welcome. Sorry, we just feel free to sit wherever you want, including here. But have your coffee or anything else. Annabella.
Good morning, everyone. And, by way of introduction, I actually come from a public policy background. So I'm in a crowd of sustainability people. But the reason I'm here is also because, Carlo, when you're running through all the different levers that push a company towards product portfolio transformation, of course, there are all the pressures that you have to stave off from, investors, the activist groups, media, or consumers. But nothing gives it a push more than when the regulatory pressure is coming in. And I think for all the companies here who are in Europe, we have the EU's eco-design for sustainable product regulation that's coming in. And for the fashion industry, textiles has the privilege of being one of the first under the Delegated Act. So in many cases, we know the regulatory requirements are coming in, And as a company, it's really about making sure that we can be resilient and prepared for the regulations once they are in. The ESPR, when it comes in, will have a lot of requirements that would put requirements on our products. For instance, durability measurements, recycled content, recyclability. And there are all these different aspects that we are starting to look at. But I think for the example of this conversation and to make it more relevant to the circular economy transformation, I'll focus on the recycled content part of the transformation. So, when Shin first started out in terms of setting targets for our materials transformation, it came first from a sustainability perspective. A lot of our peers already had, ambitious targets around phasing out the use of virgin polyester to recycled, but also in the natural fiber space. There's also a lot of transformation that's required from virgin cotton with, its heavy land use, water footprint towards recycled content, and similarly for other fabrics like viscose or rayon, moving away from wood pulp from forests towards recycled materials. And I think for the textiles industry, this movement, if we can really have our materials, our next-gen materials, come from textile waste, that is the moment for us that the energy sector had with recyclables, with the renewable energy wave. So we see that transformation as a very important part of it. Shin within, just to focus on the recycled polyester part of the component, our initial target when we set one was based off what we thought would align with our own SBTi commitments. So on SBTi, we have a net zero target by 2050, but our near-term goal is also to decarbonize scopes 1 to 3 by 25% by 2030. And in order to meet this 25% reduction, category 1, which accounts for the making of our products, the materials transformation will play a part because we've also done like a life cycle analysis around the carbon savings that would come if we were to switch off virgin polyester towards a recycled polyester, and there was a difference. So that would make some bit of difference. So our near-term target for virgin polyester is one that's would contribute towards that, and it's 31%. But I think what's important and helps the systemic change is right now, if we wanted to purely hit that target, there are ways to do that in a fast way. For instance, using recycled polyester that's made from plastic bottles. That's readily available in the market, and from a price point perspective, it's more palatable in terms of being closer to the virgin polyester price. But in fact, we have been encouraging and focusing on the recycled polyester that comes from textile to textile sources. So because we believe that if we focus on the sources of recycled polyester that actually come from textile waste, that would be more impactful in having the systemic changes that we need to eventually create that circular economy. So, like last year within our virgin recycled polyester goals, we had 8%. We reached 8% out of our 31% target. But what's more important and which we are more proud of is that of this 8%, 12% of our recycled polyester came from textile to textile sources. And that's also something that we have been focusing a lot on, working with innovators in the space, the fiber producers, working with them to see how we can further improve technologies to bring down the costs. And this is very important for Shin in particular as a company, because our products are priced not with high margins, the price point of Shin products. So we are very price sensitive. And in fact, it also speaks to the consumer base that we have. I think, a lot of people might not know this, but of recent consumer surveys that we did, more than 75% of our consumers reported that they are coming from the income bracket that's below median income. So I know for a lot of companies, when they do think about the product portfolio transformation, you think it's inevitable that some cost sharing would have to happen and some costs may have to be allocated to the consumer. But for us, we are trying as much as possible not to have that burden onto that consumer because, yeah, you know, it's just difficult if we're talking about, you know, consumer base that also has a limited disposable income.
Thank you so much. That's fascinating. I'm learning quite a lot from all the different cases. That's the beauty of not over-preparing panels, so I can get surprised, which is good. And Annabella, I have a question for you. A lot of the objectives that you have mentioned are quite systemic. We tend to say and tend to believe that hardly you can really advance. I think Paul yesterday was saying in another panel, you know, 40% you can do by yourself. The other 40% you actually have to do it in collaboration with others. And then at 20, there's going to be the final maybe regulatory push and other things, right? So how do you work on that 40% that you do collaboratively? Are you part of a specific collaborative ecosystem? Are you planning to join? I think we have, for instance, Fashion Pact is one of those, but there are also a lot of fashion collectives. Is Shine engaging in those collaborative environment? And if yes, and if no, why?
I think the short answer is yes, we are engaging in some of them. You know, for instance, with our preferred materials transition, we work with non-profit organizations like Textile Exchange to support and advise on that, and with Canopy, who works specifically on the man-made cellulosic fibers transition. But I think the problem with some of these organizations, to be candid, is the level of systemic change that's required will need to come from actors beyond the textile sector. And I say this because I think financing is a very important part of the puzzle. All this infrastructure that's needed and to be built out requires huge amounts of financing. And we need the investors, the venture capitalists to also come in and support with the, you know, the material innovators. That part, I think, maybe it's not as well understood now by the financial community, and you know that's what we have to try to do better. In fact, later this afternoon, there's also an event where one of our partners, Canopy, is in fact discussing a new initiative with investors in the panel, but also with the Indian government, to talk about how they can support a blended finance model to help in the Indian textile manufacturing community start to build a new ecosystem that produces not just viscose products, but also paper packaging that could come from agricultural waste as well as textile waste. So I think that actually, if you look at the stakeholders that are around the table, already starts to broaden that conversation a lot more. There's like the government support that's coming in, there's the investor community that's going to come in, there's the experts in the space, which is the non-profit organizations, and then, you know, a brand like us will help to provide the perspective on, as a, you know, prospective client in the value chain, what are the sort of requirements that we need, and you know what are the supply chain issues that would hope to address from this.
Thank you. There is a question.
I have a question. Is there permission for the non-moderator?
I'm officially letting go my...
This is very fascinating. It's very nice to meet you, Annabella. I will call myself Jenniferra, so I can be your favorite also. Yeah. And also, I appreciate you being here because I know it's hard, and I can imagine, I mean, you need to be very brave to be speaking in general, because I know that your company faces a lot of pressure, and it's nice that it's not just the pressure on me, for once. Yesterday we were in a lunch with the New York Times, and to kick off the conversation, the moderator said something like, "Say something controversial that you've heard that you've said or that you've thought. And then people were saying like these very like intelligent things, you know, that, like intellectual like you do when you're in Davos. And I said like, I'm the chief sustainability officer of a tobacco company, and that's just the end. That's like pretty controversial, even if I don't say it or not. But it's the first time that you and I met, and I was listening to what you were saying in terms of the efforts that you're taking. But I'm just curious on, you were talking about clothes made from recycled textile, you know, and that circularity. So is that coming from your own production? And if it's coming from your own production, is it from like stocks and volumes that you're not selling that then you're like repurposing, or do you have like some kind of model for your? So you're talking about like a very low segment base affordability, right? So are those people part of the system of sending back, and then do they can afford to do that? So are you like subsidizing it? Like how that circularity in practice works, you know? There's so much volume of wasted textiles indeed, and that is a very material part from the externality that it creates in the environment. So I'm sorry, I say this with utmost respect and with all the kindness that I have, because I get grilled so often, so I really mean it in this safe space. So please forgive me if it's coming across in the wrong way.
No, of course, I think that's the spirit of why we're here, to learn and share from each other. And, you know, of course, we are on a journey, and, you know, we look for as much advice and support from others. But that's a fascinating question. That's, you know, I'm going to get a little technical and geeky, but, you know, in the, for textiles, there's a problem of where does the textile waste come from? Is it post-industrial, which is the scraps from the manufacturing process, or is it post-consumer? The holy grail and end goal that we want to get to is post-consumer textile waste, but that still has a lot of challenges. There's a problem of collection, there's a problem of sorting. From a technology perspective, you need to look at the blends. The current technology right now, you know, there are different technologies that can accept different percentages. So if you're collecting used textiles, there's a lot of information that needs to come from the used textiles to be able to understand, like, you know, is this suitable for that or not, blah, blah, blah. So there's a lot, and that all adds into the cost, and it's humongous. So that actually would be
Do you
the
have an
end goal.
insurance for that?
No, we don't, but maybe that's where we need to bring Linda in earlier, like you said, because I never thought about insurance as one of the levers, but you're right. So I think that's where we want to get to, and you know, of course, that's the vision for the EU as well, with you know, the textiles EPR coming in with the Waste Framework Directive. Hopefully that will help to subsidize some of the infrastructure development costs, and then get that up to scale. But for now, the textile-to-textile piece, recycled polyester that we're working with comes from fabric scraps from the manufacturing process. So that's still scraps that is happening anywhere, because, you know, like your cut-offs and all of that. But that's easier to work with in a way, because it's cleaner, and you know exactly the composition.
Like, don't want to monopolize. I know.
Sorry, yeah.
So because it's cleaner. So what happens? So what do you do with the stock of like not what is not sold on your volumes? Because you know exactly what it's made of.
Yes.
So can you recycle that?
So
this is my last one.
yes. So for Shin, actually, we have very little unsold inventory. I don't know if people have heard about this, but our production model is actually one that is on demand. So we don't predict, like, you know, production, and then it depends what sells or not. A lot of our production is very agile, and our excess inventory rate is low single digits. So we have very little unsold inventory. Right now, those unsold inventory that we have, if any, in the warehouse, it's sold to second-hand distributors, usually in, you know, Africa or, yeah, you know, other continents like that. So for us, it's not a big problem.
Good. No, I mean, very. I like the fact that it's very interesting for all of us, and we all learning something. So, thanks for that. We'll shift into a bit this dynamic of a larger family discussion. And Arjen, Arjen works with me on this topic and with many of you since some time. So the product portfolio transformation topic, if you can maybe help me out a little bit introducing the Q&A, and I know I want to hear from Julia. I want to hear from everybody here in some form. Sylvia, very different industry. Can I pass you the microphone and introduce the Q&A?
Well, I guess you kind of did right now, so I'm not going to spend too much time. But maybe I can kick it off with a question myself, and then we'll go to you. You were first for sure. In working with chief sustainability officers, it's often about getting leadership engaged. And Carlo, you mentioned courageous leadership. When I speak to chief sustainability officers about product portfolio transformation and getting the leaders engaged, my experience is that they often encounter leadership to go into a mode of premiums. Adding sustainability in the mix of the product portfolio is a selling premium conversation. Whereas, Carlo, you said it, and I heard it here as well, it's about the whole portfolio, it's about transforming to sustainable by design. I wanted to ask, I don't know who wants to answer, how do you deal with it? How do you get your leaders to understand that this is actually quite profound, quite holistic? It's not just about selling more by adding just a sustainability component.
And maybe I extend that question to all the other company here. Yeah.
Yeah, we can continue with more questions indeed.
Somebody might want to answer or ask. We are reinventing our session, Jenny.
Okay, I'm happy to add a question and take it with a pinch of salt, because I'm in this comfortable position where I work a lot with companies, but I don't have to do the hard work. So I can do a bit more of the challenging. But again, I think...
Julia at IMD.
Yes, indeed.
Okay.
So I think what I'm hearing a lot here in this panel is product portfolio innovation, not necessarily transformation. Because for me, the missing part, and the most difficult one, is ex-innovation. If we are all very good in adding new stuff, we're pretty bad in taking off unsustainable stuff from the market. So what most companies do that I observe work with is they add a sustainable alternative, but they're not taking off the product that is particularly harmful. Jennifer, sorry for putting you on the spot, but we work on this, right? So one of the things is you're offering smoke-free alternatives. At one point, we need to take off cigarettes. And when is this point? How long are we taking along the unsustainable alternative? Because otherwise, we're just adding more, but we're not taking off what is actually really harmful. And I think not at all PMI specific. This is across industries. And I think this is the most difficult question is, if I have a product that sells well, and I know that it's harmful, at what point do I actually take it off? And I think this is the conversation we still need to have.
It's true. We should add it into the list. You want to answer? Yeah, I answer quickly. We should add it into the list of on how does transformation look like. To Julia's point, it's about expanding your product proposition. Correct. Correct. So I think that, okay, so my answer has two parts. First, this is a question that we get a lot, right? You're still selling cigarettes, which is true. But part of the reason why we're still selling cigarettes is because of what I was explaining before. We're still a publicly listed company, so the transition needs to occur at a pace in which we can still fulfill our fiduciary duties, but be very clear about the intention. And the intention is really to base our success on not making or selling cigarettes anymore. And so connected to that, an element related to trust. So how can I work with academics, or how can I work with different parts of society if that doesn't make sense to you, you know? So we talk about it a lot, but the cigarettes are still part of the portfolio. So is your value proposition optionality? Or is it really to transition to a place where negative externalities are really removed? And I think that here is where transparency and, for me, metrics are so important. We've talked about this. Business transformation metrics is a very important component of our transformation. Bespoke set of KPIs, financial, non-financial, that are very relevant indicators to show in a transparent way the pace and the scale of the transition. So how is it that we are measuring and engaging with relevant metrics that, again, are industry agnostic? So energy could take them, food could take it, fashion could take it, where you say 100% of my revenues were coming from cigarette sales, and today 60%. my volumes of cigarettes in 2015 were 900 billion units. Today, 500 billion. And so, and not just that, but when is it zero? And so I think that the picture is completed in reporting backwards very transparently on metrics that are meaningful, that inform this discussion. And in relation to the levers, how does the North Star look like? So when are your volumes of cigarettes zero? And why are your volumes of cigarettes not zero in 2030 or earlier? And here's the part where I can say, well, in certain markets, it could happen faster, in certain markets not, back to policy, infrastructure, consumer demand, and all the other levers. And I think, and I credit Julia a little bit because we have had this conversation, and I think having these critical friends is very important because you can get into a place of comfort where people understand the transformation, so they give you to do it slower, where you have that challenging, you understand, are you doing enough or not, and how much is in your control. So our business transformation metrics now, as we continue reporting, will have this breakdown of showcasing where is it that PMI is present because the regulatory component facilitates and accelerates transformation versus countries where the products are banned and so you cannot introduce. And that informs an even better conversation. So I'm selling cigarettes because I cannot sell anything else. So I would not sell them anymore if the regulatory framework was a different one. And that, again, allows a very nuanced conversation on policy, on the different levers, which is quite nice. So I think it's an element on intentionality. I think it's an element on completion of the timeline. So reporting backwards transparently, but also what is your North Star? Where do you want to go? How is your pace of progress? And then to the degree that you can, provide that granularity for comparability. Here is working better and here not, and why? Because then you start getting a good recipe of how product transformation really looks like.
Thank you. Thank you.
Sorry.
Great answers always come from great questions, and I see there's even more great answers coming, so please.
Just very quickly, our transformation is not about adding products, because what I said is actually the same products. What we are changing is who are the customers that we are targeting. Right? So actually, it's more about customer segmentation than adding products to the portfolio, with the exception of energy. There, our portfolio has transformed entirely from being quite fossil fuel heavy to actually, when we started to introduce first thresholds around thermal coal, oil sands, and then oil and gas as well, this portfolio was already very risky. And when we added our commitment to sustainability, it was very easy to transform that and say, okay, we're just going to go after other energy sources. And that's the way, because that's neat. And it's the same with always trying to, in our minds, it's always about, okay, so what are the protection gaps that we can fill? So it's much, much more about, okay, so who are the customers we go after with our products, because our product portfolio is really hard to change.
Amazing. Thank you. We have another question here.
And after. Good morning, everyone. I am David Laborde. I am from the UN Food and Agriculture Organization, where I lead the work on agri-food economics and policy, and also the global roadmap we have basically to make sure that we get good food for all today and tomorrow. And I think here what we discuss, and this is sustainability, is how we deal with today and tomorrow. And we know that this big intertemporal challenge is difficult to solve. Markets do it partially, government do it partially, and so we need both. And you talk about innovation, we talk about premium, we talk about how we get rid of some product, and we know that innovation is about creation and destruction. But this destruction can create destruction of value of assets that today in your portfolio, I think has a problem of valuation. Because we are with a lot of economic myopia, when we look at prices of today, when we should think about these prices are going to change. They have always changed. And the way that we want a more sustainable world means these prices will change. And when we make some decision today about what to keep, where to invest, and what to drop, we still use current prices, and not really the prices we will have in 10 and 20 years. And so I would like to know how you do this, in your companies, how you engage in this value proposition about changing the structure of the portfolio, when obviously you still have quarterly report and market are still a bit sometimes short-termist. So that's my first question. And the second question that, yes, prices also help to guide the system, because we are talking about system transformation. they carry information. But we also know that through discussion, for dialogue, we can coordinate. But we also need norms and regulation to coordinate. So on this question, when you engage with government, with regulatory agency, how you engage with them in a way that can help this product transformation and maybe not give what is needed or what you want on the short term, but more what you need to do this transformation and to get the right rules of the game for bringing this future path.
I don't want to call you on the spot, but I also want to check, I don't know, Sylvia from Hitachi Energy, Christine from Kuehne Nagel. You sell also products that have very long life, in a way.
Exactly.
So I think this notion of price can also be very interesting. I don't know if you have this is a quite insightful question. Yeah, it's really a good question. I don't know if you have something to say about this.
So I'm Silvia Giorgetti from Hitachi Energy. We are the, let's say, energy branch of Hitachi Group, and particularly a leader in the power grids transmission technology. So we take care of the big infrastructure project that allow the transmission of energy, and particularly the integration of renewables, etc. So indeed, for us, time frame is key everywhere. I mean, this panel and what we discussed today really touched a lot of points that are also very common to us, maybe in a different way. But we have a very different time frame from the innovation, let's say, length that we need to have, because are very highly technological products, to instead, specifically now and in the last few years, the pace that we need to provide this technology to the grid for the pace that the electrification and therefore the transmission is needed. But on the other side, the time frame is also disconnected, let me say, between the life of our products that, as Carlo was saying, is, let's say, 40 years plus, if we're able to extend the life through service, etc., etc. And of course, indeed, the prices, etc., will be very relevant. The point is that in 40 years, the infrastructure that we build will not be in our hands anymore, will be on the customer side. And that creates, for example, from a, we were talking before, recyclability perspective and, let's say, returning, etc., of our products, a challenge, because it's not in our end. And that's where, more than looking at the pricing, and which is, of course, very important in any case, we are looking at changing the business models, so to really partner also with the customers on several projects in looking at their, let's say, optimization of their installed base, and really looking at how we could, even in this longer time frame, we could have a way to take back or us or in the system, in that systemic infrastructure that we were discussing, the materials, the products, and therefore having a return both in terms of sustainability and of asset value for them. I don't know if I answered the question somehow.
We are answering and adding, which I think I love it. It's in many ways. I don't know, Arian, you have... First Christina maybe, and give a quick on perspective. Yeah, I called that out, sorry.
No worries. There's actually two people waiting here, but that's okay, Carlo.
And
if you say you're called Christina, then you're fine.
And then we'll have to wrap it up because we want to have Paul to help us with some closing remarks.
I also have to...
Thank you.
Yeah,
Let's be efficient in this last part.
So on the pricing, right, and how you can transform your portfolio. So for the Logisto, I'm Christina Wiederkehr. I'm Global Head of Sustainability of Kuehne Nagel, one of the biggest logistics providers in the world. And of course, we are heavily relying on still fossil fuel, right? So most of our business is still fossil fuel, even though we have, for every step along the supply chain, we have sustainable solutions, but of course they come with a premium, right? And A second fact is that Kühne + Nagel is very asset light, so we don't own ships, we don't own our own airplanes. We have a few trucks, but most of it is in a third-party network. So we really have to rely and to work in collaboration with customers and with the suppliers to really transform the energy. And the big problem, or the challenge, so to say, is the premium. And we really have to see that we can scale sustainable solutions. And my big vision is that sustainable solutions are becoming a standard in the end. But of course, right now, we have also to say in a transparent way that the sustainable solutions are still acting in a niche, right? But what is good to see that even in these challenging times, customers are still on sustainability, are still working with us on sustainability. They are still asking for sustainable solutions. This is really promising. So I really am also optimistic that we bring sustainability out of the niche, and this is really needed because global trade will increase, logistics will increase. We are responsible, not as Kühne + Nagel, but as logistics sector, about 10%. This will increase to 20%, so we really have to work together. And I have some promising examples with customers in front of me that we are working on sustainability, also with Linda, so I'm very optimistic. But we have to bring it out of the niche. That's very important, otherwise we always have the price problem.
Clear. Carlo, I'm looking at you because I have two ladies here who'd love to add.
3 minutes. Okay. 1.5 minutes each.
Cristina Diamante. So, Managing Director, Business Transformation at BSR. First of all, thank you. This has been fascinating, so thank you very much for all the sharing. We're at Davos, ladies and gentlemen. Mark Carney said yesterday that the rules-based order is over. The era of globalization in the 1980s and 90s is over. Middle countries are rising. And we've got 3 fantastic chief sustainability officers from different regions of the world. What are the regional geographies of sustainability? And you've talked about Europe, you've talked about the United States, but is it homogeneous, or are you seeing different transformation trends, and how are you dealing with that challenge? And my second thing I just want to say, because we have Paul Pullman in the room, is I think you said it takes courageous leadership. Who has been that courageous leader that you've worked with who has ignited your transformation?
So all the final questions are for Paul. Yeah, please.
Wonderful panel, very inspiring, courageous leaders, I think. I want to add on that, do we need a new kind of governance model? Yesterday, Paul, you were talking about there's a lot of short-term thinking. CEOs are temporary in a role, and you need that business continuity if you want that real innovation that Julia is talking about. So what will it take, right? And then you've got the local perspective, and you've got all these politics and dynamics now. So does that require a new kind of governance model to push? And yes, we need more CEOs that are courageous. I believe so.
Thank you. We have a yes. Paul, have you heard enough? Have you heard enough?
Are you ready?
Give us a bit of your point of view on product portfolio transformation, and
how much time do I have?
All the time.
8 minutes. You asked.
Sorry to come in late, but I had to pick up an event today at 6:45.
It was raising sound.
It was racing. It was Formula E. It was Formula E, and my good friend Jeff Dodds, who runs it, has just been qualified as a B Corp, the first company in sports actually that is a B Corp. So they were launching that this morning, and they were doing things, and that's a great achievement. So people say, wow, you know, this is the Formula E race cars and all that stuff. How can that be sustainable? It probably is one of the most sustainable industries. All the material they use is recycled. Energy efficiency is 94%, 6% missing, but they're easily offsetting that. all of the audience is becoming younger and younger. 400 million. They project in the next 2 years to be 800 million. And anything they do to make the sports more attractive is actually efficiency. Efficiency is their business to win. Over the longer term, they don't look at it for the next race. They look at it for the next seasons, etc. So the acceleration on electric vehicles, for example, and electrifying mobility is probably, they could be very proud to, I'd be proud to work in Formula E and say, we electrify the world's mobility, So they have designed an industry that the world needs. And it's a big discontinuity, a big transformation from the original Formula Ones. I remember when I was a little younger, I went to Bernie Ecclestone, who owned Formula One, and he was just interested in the money. And the Formula One image was, people would accuse me, because I like Formula One. So people accuse me and say, how can you be so passionate about sustainability and yet go to Formula One? I had to defend it, and I had to say, yeah, but this is why, and some balance in life, all the other things. But it was like being with the back against the wall, And I would go to Bernie, with some friends of mine introduced me to him, and I explained to him, but he couldn't give a hoot, because he said, I'm not going to spend any penny on creating or protecting a forest and calling it, Lewis Hamilton Forest or whatever. I had some ideas for him. Max Verstappen, indeed, but I didn't want to go that far. But because I stay global.
No, sorry, I just say some good news. McLaren is actually doing
absolutely.
some great work as well.
Yeah, not even finally. In fact, the one person that went with me to Bernie Ecclestone about 15 years ago was Zach Brown. So Zach is working with Mark Engel, the Unilever procurement guy and all the other things, and with many others now. So McLaren definitely, but Formula One has changed, but Formula E is the extreme of transformation. And very well positioned. Why are they having 400 million people following them? Why are they so confident? They're really confident that they have 800 million. I mean, that's more than Mr. Beast has nowadays. So, so running a business model or transforming it is just thinking about the future. When we were running Unilever, I was always, in my whole career, I was always sort of thinking, how come that companies have these major restructurings and that affect people, Because somehow I got scarred from when I was young. My father worked in a tire company, and he was caught by World War II, not having education. He was 15 when the war started, 20 when the war ended, so there goes your high school, there goes your university. I don't know if he would have been able to, but he certainly didn't have any because it was taken away from him. That's where these people were so passionate about creating a better future. And a better future for them included communities, included peace, included working together, included investing in education in their children so they didn't have to go through the same thing they went through. They ran a sustainable business model. And they knew that by doing so, they were better off themselves as well, because they had seen what that was the other side. But one of the things that has left me, even as a child already, was, does my father have a job? Does my father not have a job? Because totally out of his control, he was in moments of high anxiety that was then brought back in the family because some idiots up there made the wrong decisions. So I've put in my mind that never ever would I run a company where I would put other people in those positions. Even when I ran Unilever, actually I never laid off people. You had to close factories because the products were not needed anymore, and you had to open factories. But I made 100% sure that 100% of these people had jobs, that 100% of these people were being trained. And some financial people said, yeah, why would you do that? You can bring it to the bottom line, can earn more money. Well, hell yes, can earn more money in this quarter. But how do you think these companies are doing 5 or 10 years from now? And then there are most of the CEOs, they know that they have an issue brewing, but they don't want to deal with it. We're only here for 3 years or 5 years, maximum. The average tenure of a big CEO now in a company is 4.5 years. So let's kick the can down the road. Let's kick the can down the road. We don't have to deal with it. In fact, that's what the CEOs are doing in Davos right now. Have you looked at the web risk report? Oh, geopolitical is a big issue. Yeah, I know. Tell me, teach my mother how to suck eggs. We all see what's happening in the world. We don't need Carney for that, to be honest. We're in a big mess. But that's not the biggest issue right now. What do they say? Oh yeah, the big issue is this because it's in the front page of the Wall Street Journal. But the most important issues that cause all the underlying, let's say the destruction of our biodiversity on which we 100% depend, our living system, we have an economic system that destroys our own living system. And we think we can continue to do that. Now we're realizing that the music is stopping to play. So the CEOs say, yeah, that's a big problem, but that's 10 years down the road. It's amazing that it has dropped out of the top 3 even on this year's Davos and goes to 10 years from now, which is again the same idiotic behavior from a lack of leadership that we don't have an issue. The issue is for someone else to solve. Because I know in my business model, I can sort of ride the wave for the next 3 or 5 years, squeeze the lemon a little bit more, try to drive up my shares by doing share buybacks, walk away with a reasonable salary, which has become obscene now. We're now paying people even $1 trillion, and then let someone else deal with the shit. So most of the restructurings happen when a new CEO comes in. Oh, let's put the base at 0 again. He doesn't get penalized for that. Nobody else has to refill the bills, and the game starts over. And that's how 90% of the companies in this world are being run. So it creeps up on you because we are not making the right decisions. And slowly your business erodes, and then you have a crisis. So transformation is actually, perhaps some people use the courage. I don't use the courage word. I think it's just a normal way of how we run our business, by trying to deal every day by making our business better and not avoiding these issues so that they accumulate and someone else can deal with the shit. But this is the reality of corporate life, and I can give you any company. You can look to Boeing, you can look to GEs, you can look to Wells Fargo's and all the other things. So they're not here. No, they're not here, but even if they're here, but I can mention other companies. But it's just not facing reality. It's just not facing reality. In Unilever, we had the bigger acceleration of acceleration of transformation also came out of not facing reality. Remember the drought we had in Brazil because we're cutting, the Amazon is about 16% more cutting of the Amazon, we're toast. The Amazon has already big parts of the Amazon that are becoming carbon emitters versus carbon absorbers. We're cutting still, deforestation has come down now under Lula, but it's still enormous amounts of deforestation that are happening. And they're in all of our supply chains. If you're in fibers or if you're in food or whatever you are in the Amazons. If you eat meat, every piece of steak you eat is probably linked to a tree that cut down in the Amazon, because they need the soy, the beef, and all the other things. They'll present big pictures, but and my company is not the problem. But holy shit, if your company is not the problem, which every company says in their CSR report, where's the problem coming from then? Is there some hanky-panky in the shadow happening behind with some products or some industries that we don't know about? Give me a break. I mean, we're well aware of what's happening in this world. And the good thing is about it is, so for Unilever's transformation, we lost 100 million because we have a very big Brazilian business. We lost 100 million because people didn't have water. But it accelerated us to get to waterless shampoos and make a transformation. A step that we thought, the market isn't big enough, our consumers don't want it. The same happened then in South Africa. You might remember Cape Town. And you go around the world. So now Unilever is the leader in waterless products in these sense. It's a big business. Thank you very much. But it needed a crisis. Couldn't we have foreseen that? Were we that far removed from reality? Hellmann's is a brand that sells, that makes $1 million a day in profits. It's, everybody seems to like Hellmann's and eat Hellmann's. I don't know why, but it seems to. So, but it needs eggs to make these products, We had to stop the Hellmann's business because there was this avian influenza. Remember in the US, couldn't buy eggs, people were competing, etc. Well, didn't we see that coming? Didn't we know that we have these infectious diseases coming out of our ears now? Wouldn't we, if we would have been aware of it, built a little bit more resilience in our value chain to not lose $1 million a day? No CEO likes that in any business you run. So do we need a crisis? I have 1 minute. So do we need a crisis to change on things that we are so aware of? And why doesn't that get into a business model? This is where the CSO role comes in my opinion. The CSO role now is even more important, but it needs to be a business role. Business is trying, the leadership in your businesses are trying to optimize, to be efficient, to earn more money, to probably please the shareholders more than the other stakeholders. That's still a little bit the tendency. if you don't believe me, only 20% of companies are really taking action on climate change, and only 5% are in line with the Paris Agreement. So that means 95% is not doing what they should be doing. We have the science. Anybody disagree with the science? That's fine. You belong to the 2 or 3% that call themselves Donald Trump, but that's it. But we know have the science. Why don't you run your business on the science? How many discuss nature and the risk of destroying nature in their board meetings? Well, according to the World Benchmark Alliance, who looks at 2,000 companies, it's only 3%. And frankly, I'm not even sure what they're discussing. So where are the CSO people? Who is influencing the CEOs to make the companies run responsibly? Where are you guys? Oh, we don't care anymore. My budgets are cut. I have to just be compliant and fill in the things. And here is my CSR report. I'm doing a little bit more than last year. Who gives a shit that you do a little bit more than last year when the problems keep piling up? So if we really want to be a transformation, you have to put yourself in the center of the business and say to people now, you know, really, honestly, it can be done. I know for every change you need to do in life, I've done a lot of changes in life. For every change in life, there are 10 reasons to not do it versus 1 reason to do it. I was the same when my mother said, your grades are bad in school. It wasn't my fault, it was the teacher's fault. You know, and I couldn't really change because I didn't have, I had 10 excuses why I couldn't do it. So most of the issues that we have in the world right now, and I would challenge each and all of you, of what issue can you not solve if you would ask 3 or 4 times why? Hamdi, who's a great friend of mine from Chobani, he tells me the other day, okay, we need little strawberries. You know, in our yogurts, people like strawberries. So he said to his people, where do the strawberries come from? Because Chobani is growing really fast in the US. Everybody wants proteins, etc. People said they come from Poland. They come from Poland. So how do they get here in my Chobani? Well, we fly them in, you know. Boom, 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 boom. Hello, I'm a strawberry. I took first class. So, you know, think about the carbon footprint. So Hamdi said, but do we have to get strawberries from Poland? Yeah, because it's cheaper. We can't find them in the US. Okay, why can't we find them in the US? Because they're more expensive. Okay, and they walk out of the door. They don't ask themselves why. Fortunately, Hamdi said why. So the first why was, well, in California, and that's regulation, so it's so expensive. Well, let's go to California, go to the farmers. Well, what did they find out? About 20–30% of the strawberries are rotting on the fields. They're rotting on the fields because they can't get enough workers to pick them. The farmer is not making any money because 30% of his crop is rotting. Which business makes money when 30% is written off? It's the same in food, by the way. We waste 30–40% of the food. Think about how much money is in the system. Think about how the farmer would be more efficient if we paid him decently. Think about if we would not use pesticides and herbicides, but use some biomethods which are now available to enrich the soil versus each time having to use more because you starve the soil. Think about just talking about what's happening. That's the role of a CSO. And then you come to the conclusion that indeed these strawberries can be, you have to do some things, and it's a little bit of work. You might have to cancel a holiday, but you fix the problem. What is missing? We have the money, we have the technology, we know what to do. What's missing? You tell me on any of these challenges. And I challenge you on any of these challenges because I work with a lot of companies. Or then they say, yeah, I can't do it because the technology isn't there or the cost isn't there or I can't get enough supply. Well, then get together with people and do it. Many of the fashion companies said, yeah, I can't buy green energy because I don't have people, I don't know how to do it. It's so big and it's so complicated. I said, well, let's get together. How many companies want to join? 30, 40 companies, so we join together and buy green energy. You know, if the things are important, you'll have a solution. And I think the future of humanity is important enough to have a solution. I believe. That's why I'm so passionate about it. And if you can't do it alone, do it together. And if it's that important, you do it together. Because together you will otherwise sink. The fashion industry, if I may say it, and it's not the sheen itself a very destructive model, if I may be honest. But the fashion industry is probably one of the most destructive industries in the world. And yet it could be the net positive industry that actually is a contributing industry to restoring biodiversity, to reducing climate change. But are they willing to do it? No, because we need to sell more every day. People have now 100 times more clothes at home than they did 30, 40 years ago. People don't wash their clothes anymore because it's cheaper to buy a new one. Well, do you want to be in that business model? Just think about it. Do you want to deliberately have business models that destroy the chances for future generations? And then to say we do a little bit here, a little bit there. That's not serious, guys. If you really want to transform your companies, you need to do a few things differently. You need to first and foremost take responsibility of your total impact. Don't give me the shit that it's someone else who supplies my product. How many people in fashion have said, I don't know who my supplier is, scares the dickens out of me. How can you sell clothes and not know who your suppliers are? Yeah, but they're tier 3 or tier 4 and tier 5. What do you think I had in Unilever with all the food I was buying and how many but I could tell them from the farmer's name or the palm oil producer's name to be sure that the children were in school, to be sure that it was done sustainably, to be sure that we did it in a regenerative way instead of in a destructive way. If you care, do it. If you don't care, you're part of the problem. That's what I'm trying to tell you. But how many of you to really take care of your total value chain? If you want to drive transformation, start there. If you take care of your total value chain and take responsibility, measure your impact. Then the next thing to do is actually very simple. Once you measure your impact, you say, what does the science say I need to do? Don't really say, can I do it or not? It's not important. What does the science say I need to do? If you believe in the science. So the science says we have a problem on water. We have a problem on carbon emissions. We have a problem on deforestation. We have a problem on human rights. Then take responsibility of that problem. Then you say, I set the targets. I set my objectives. I don't know when I can achieve it, but I set my objectives to not be part of the problem. Ideally, I would argue, set your objectives to actually become a positive contributor. All the friends we want to live with, all the things we want to do in life is positive contributing. So then you say, holy mackerel, this is so big I can't do it myself. So you need to do it over 10 years. Get your CEO to make a plan. Think what it requires in your own company. Do you need to incentivize people differently? Deloitte has done a study. Only 30% or 35% of people have linked sustainable improvements to their salaries. And it's actually, in many companies, it's a little bit of a game that is not really serious, in my opinion. But then, how many do really capital allocations around these things? We see a gross mismatch between what CEOs say and what the capital allocation is. So, yeah, that's driving portfolio transformation. And what is amazing to me is that the companies that actually do that, the few that we put on the pedestals, the Patagonias or the Ikeas or the names that come back, are actually increasingly and consistently more valued by the market. You're building market value because you're making your companies more future-proof. You're making them more attractive to what citizens in the world are looking for. By the way, higher demand in emerging markets and actually easier to redesign business models because you have to create them. Here you deal with some legacy systems. But you're making your companies future-proof. I can show you now study after study after study that obviously the skeptics or the self-interested people who want to keep the status quo are trying to attack. But study after study after study shows if you run your company longer term, if you integrate sustainable targets, if amongst the carbon leaders you're actually a leader in these groups, whatever you want to look at, if you run it for multiple stakeholders, if you are a B Corp or whatever, your overall valuation is better. Of course there are exceptions because you still need to run your company well. There are many things you need to do in discipline to run your company, but your performance and your valuation is better. So then you say, okay, I'm getting out of this comfort zone. Because if you don't feel uncomfortable, you're not driving the change fast enough. By the way, if you don't have fierce critics of what you're doing, you're probably not driving transformation either. Any transformation will have 10 times more critics and some skeptics and some cynics than anything else. That's why you're a CEO, that's why you're getting paid so much, to stick and stay to the course. Then you think, okay, there are some things I cannot do. Unilever, I couldn't solve the human rights problems in the world. I couldn't solve the whole issue of unsustainable palm oil and deforestation in Indonesia. I couldn't solve the issues of plastics in the oceans. But I knew damn well that I was a big part of these issues. So I first tried to do what I can. That's probably possible. But then I form alliances. We formed the Living Wage Alliance globally, the World Toilet Organization to deal with the issues of sanitation. I worked with John Ruggie to implement the principles of human rights. I put myself in the position of the chair of the ICC, the International Chambers of Commerce, the World Business Council, the UN Global Compact. I didn't do that because I wanted to cancel my holidays. I did that to be sure that that would be in the center of every business. that you could only join these organizations if you would sign up to these principles of human rights. I put 2.5 years of my work in the Sustainable Development Goals because that is the best business plan that you can think of to make your business more resilient. All to say that if you can't solve it alone, then you start to go in overdrive to create these alliances to work together. I can guarantee you that you will very quickly, in today's world, get more people to say, I want to work with you, than at any time in history. Because everybody knows that we're in the shit. When I started, there were no data, no proof. The technology was not so far. The financial market was incredibly skeptical. Now, the issues you now deal with are minor compared to where we were 15, 20 years ago. Then, my last sentence before we stop, my last sentence is, then you work together in these alliances where you do this pre-competitive stuff. And then the final thing you do is, it's positive advocacy. Don't give me the shit that the politicians are to blame. I know it is the low point for politics right now. We all know that. We make enough jokes about it. But we need to deal with them. Ultimately, we have too many companies that are free riders, that people that don't really want to play this game, that just look at their own self-interest. And they are there. And there are plenty of those, believe me. There are too many companies out there, and greed is still a driver for many people. So then work with governments. We went to the French government and say, put a minimum tax on clothes. We go to the European Commission and say, look in fashion what wet washing is, how carcinogenic, what materials are being used, what people. Don't allow these products in Europe, because we think that you need a certain standard that counts for everybody in the world. Why should we have people in Bangladesh or the Ungars in China or wherever be treated differently than us here when it gets to these issues? So we work proactively to put these standards in place. We don't blame governments. How can governments figure out in all the industries what to do? Now, if you don't show up, you are on the menu, because then it becomes regulation by attacking problems. Then it becomes defensive. Then we all complain that you know, it's useless regulation. We all fill out the charts. We become accountants instead of driving the progress in our businesses. So move to advocacy. Now, how many CEOs go to Brussels or Washington? Actually, I have the answer. It's 6%. What do they do there? To lobby for their own interest. We elected a president with $4 billion, of $2 billion came from the fossil industry. Let's just be honest about these things. So are we really willing to get the legislation we want? It requires us to really move into advocacy. I've been trying with the fashion industry. We seem to pick on fashion because that's the only part I got from this discussion. But, you know, the fashion industry has no representation in Brussels. If I talk to most of the CEOs, no real representation. I talk to most of the CEOs. Are you even willing to go with me? Because I feel so passionate about it, I'm willing to go myself. I have nothing to do with fashion, to be honest. I'm not a fashionist, and I don't understand the industry. But I said, why? No, I couldn't give a shit. But I'm willing to go for them for free in my own time. That's how important it is for my children and for my grandchildren. What it used to be, but now it's also for myself. It's that important. So I just want to be very clear. My final sentence is, if you are a CEO right now, step up to the plate. Get this leadership that you know is required, and get out of this little bubble of self-pityness, and start living the life we need to live to make our companies the biggest companies. So this is our moment. And that's really the transformation that every company needs. And not, and stop publishing your CSR reports. Start publishing net positive reports. First read your book. You know, I don't mind if you buy it, but first read the book. But then who has the courage to publish their first net positive report?
Why not? I promise you.